just don't do it. If you're already bored and want to click off this video, you definitely don't have what it takes to succeed at trading. And honestly, it's probably better if you just save your time and money. Okay, now that 90% of people have left this video, because that's honestly the statistics on how many people fail at trading, let me talk to you about how you can overcome those statistics and actually succeed at trading. People honestly don't really talk about how hard trading is to succeed at. It's so easy when you first jump into it to think that you can make money quickly because you have, videos that say you can make $1,500 in 60 minutes. And you don't realize is those people have spent years getting to that point. When you first come into trading, your earnings potential is like an exponential graph. You're going to start out spending months, years, basically making no money, maybe even losing money. And only when you really start to master it is you can start to make a ton of money, and that exponential curve starts to become a reality. Because when you're starting out, you're going to be trading small amounts of money where you're risking $100 in a trade, or maybe even you start out risking $10 in a trade. But later down the road, 3-4 years down the road, when you started to earn a bunch, you could be risking $1,000 in a trade. And it allows you to start to earn a ton of money and have these really large trades. When you see someone with a video making $50,000 or $20,000 in one trade, they're generally not hitting some crazy home run. They are risking $20,000 in that one trade. And so really they're just doubling their money when they make $40,000. And so what you have to realize is, okay, they're just making a good trade, but they're just massive size. And so because of this, you can't jump into trading to expect to even make profitable trades consistently where your equity curve of your account is even just consistently going up. In the beginning, you're going to be losing money and making mistakes. Beginners make mistakes in trading. Beginners in anything make mistakes, and mistakes in trading loses you money. And so a big thing though is a lot of people when they start trading is they learn about prop firms. And the thing is with prop firms is the idea is you essentially skip this whole growth period and you start risking $20,000 in one trade right away, potentially, or $1,000. So it doesn't matter, just depends on how big your account is that you get from your prop firm. Now, the problem with this is you still have to pass a test that is really, really hard. The statistics on people becoming successful with prop firms is in the single digits, just like what it takes to become a consistently profitable trader. But these are pushed a ton because they seem like a really easy way to get access to capital and money. You're not risking your own money, and you just save potential years in your account growth process. But the problem is again, it's single digits. Basically, no one becomes consistently profitable doing that. And the problem and the major factor is it costs a lot of money to use them consistently over time. You're essentially paying real money to use a demo account, when in reality, what you could do is just open up a free demo trading account on a brokerage platform and trade on that until you can consistently make money, and then try a prop firm, or then switch to real money on your own account. And these prop firms make a ton of money off of people just subscribing. And people that promote you to use prop firms, they make a ton of affiliate money from them as well. And so it's really, I don't think it's in your best interest to actually use them. And so going forwards, just be careful of prop firms. They cost a lot of money, and it's easier to just learn to trade by yourself. And in reality, YouTubers and people promoting prop firms make a ton of money off of it as well. So that's why there's a lot of push to get onto it, because the prop firms and people promoting them make a ton of money from it. And for you, I don't think it's going to be very beneficial until you've already spent this time learning how to actually consistently trade. So don't use prop firms right away. Now, there's a ton of different ideas of how trading should be or what trading looks like. And in reality, trading can be really, really monotonous. And if you're doing trading right, it should actually be like a business. The whole idea is you're just going into every day, clocking in and clocking out. You're not there to have a fun time, get excited about potential money you're making. It should not be an adrenaline rush. There's a lot of people that jump into trading wanting it to be exciting and getting that adrenaline rush. You know, in a way, a lot of ways, it is like gambling, and a lot of people get addicted to gambling. But how you want to treat trading is with a methodical process of you are showing up, following your plan and strategy, however many steps that is, and then moving on with your day. For me, what my trading day looks like is I get up at 6:30 a.m. in the morning and I trade until about 8 a.m. in the morning. And so what this does is it is a consistent thing that I follow every day. And so I'll show up, watch the charts, and if my strategy shows up and I have my checklist for what I'm looking for show up, then I'll take a trade. But if it doesn't do that, I'll just sit there for a couple hours, hour and a half, hour, and then just move on with my day. The whole idea with trading is you have a plan and you stick to it. So many people get lost. And one of the biggest reasons why probably 90% of people fail is because they are not consistent with a routine that they do and a strategy that they are consistently executing. They go into every trading day and they look at a chart and they say, okay, what is the market doing today? Is it going up? Is it going down? Is it going sideways? And they try and capture every move. They wanna buy at the bottom and sell at the highs and capture all the potential money that could be made that day. And in reality, what I have found that actually works is having your plan that you look out for. And then if it shows up, then you take a trade. And if it doesn't, you just sit there for however much time your plan says you're going to trade, and then you just move on with your day. And I have found that only having actually one strategy made me way more focused and able to consistently come into every day with basically a plan. Instead of going into every day trying to be reactionary, I went into and trying to fit the market. I went into every day with a plan and waiting for the market to fit that plan. It's a very small difference, but it drastically changes the way you approach the market and actually how you consistently succeed from the market. Not every day are you going to be taking trades. A lot of people come into trading, and especially day trading, is thinking that every day of the week, Monday, Tuesday, Wednesday, Thursday, Friday, that come on Monday, you're going to have 3 trades. Tuesday, you're going to have 5. Thursday, you're going to have 2, 8, and 10. And so you're going to be taking a ton of trades every day. And in reality, what I've found out, the better way to do this is you're taking 1 trade a day, 2 trades a day, maybe even 0 trades for a couple days in a row. And what this does is instead of trying to capture all the moves and having, a bunch of trades that if you have, let's say, the same win rate of a 60% win rate with each of these strategies, most likely this one is going to be more profitable because you're not having all these fees and commissions show up and you're able to have those trades become more significant. And remember, going back to what we said earlier, is money in trading doesn't come from how many trades you take, it's from the size you're trading. Are you trading and risking $100 per trade, or are you risking $20,000 per trade? That is where trading and that exponential curve of profits comes into play. And as well, what happens with this is when you start taking a ton of trades like this, is it's very taxing on your mental fatigue. And one thing that you cannot do in trading is underestimate the importance of trading psychology. It's extremely important for being successful at trading. Now, of course, this isn't the only thing that makes you successful at trading, but what happens when it comes to trading is this and your strategy go hand in hand. Because if you do not have the discipline or the trading psychology to stick to your strategy, you're going to fail. Or if you don't have a good, simple strategy, it's going to be really hard to manage your discipline and emotions around that strategy. One thing that I've realized is when it comes to trading, there are, infinite possibilities and strategies and ways to make money. But the thing is that if you have a complex strategy, then you're going to make it very, very hard to follow and consistently do. And so it's just going to throw in a ton of different variables at you. And what that's going to do is it's going to just make it harder and harder to focus and consistently get good at trading. And so that's where this kind of cycle happens, where you will start to try a strategy, get frustrated, it doesn't seem to work, and you can't consistently stick to it because the psychology is hard to deal with because there's so much thrown at you. And so you restart. And so what this does is it essentially makes a learning loop that people get stuck in. And so trading has stages to it and phases that you're going to go through when you are learning. And so stage one is just the learning phase. You're trying to figure out, okay, what does all this mean? And it's kind of like trying to drink from a fire hose. It's going to be a ton of information when you first start out. And so give yourself some time to process it. It's going to be a couple weeks before things start to make sense. Even if you're spending hours trying to digest stuff, it takes your brain time to just learn things. Over cramming actually doesn't help. So try not to spend a whole day watching 8 hours of YouTube videos because you're probably going to forget 80% of it. And so kind of once you get to that, the second phase is going to be the testing phase. And so you're going to be trying to figure out, okay, which strategy do I want? I've watched all these YouTube videos. Which strategy do I use? And the answer is any of them. There's no one strategy that makes more money than the other. You can use any strategy you want. But remember, the key is that it's a simple strategy. You need it to be easy to follow so you can consistently replicate it. Remember, you want to be able to do this every day. It needs to be something that you can consistently execute in a routine every day, because that's how you know what is working and what isn't. If you go about trading and start to, do all these different strategies, there's going to be no way for you to start to narrow down what's working and what isn't. And so if it's simple and repeatable, you can consistently start to journal your trades and figure out what is working and what isn't, and make profitable decisions for your strategy based on that. And so the biggest thing, and probably the biggest trap that I see people get stuck in with this, is they get stuck in a loop between these two. They never move on to phase three. They get stuck testing and learning because they cannot respect and take importance and focus on the trading psychology that is required in trading as well. What they do is, they find a strategy, they test it for a little while, and they think it doesn't work. And the reality is, when you're trying a strategy, is let's say the strategy has 3 steps that you need to follow consistently for every trade. And so every time you see the market make a double bottom, you should just buy and bet that it's going to go up. And, let's say it's at a support level too. And so that's all the strategy is. It tells you to do that every time. And, the person says they back tested it. It makes, 110% return every year if you follow the strategy perfectly. Now, the problem is everyone will approach this differently. And every time you see this pattern is you might have fear come into play and you will skip on a time that you should have entered. And so that's one instance of you not following the plan and strategy properly to hit this 110% consistent return that the strategy should theoretically give you. Or another instance could be if you start to see it come into your support level and bounce and you jump in early. That's another instance of you not following the plan correctly and misusing it. And so in reality, you jumped in early and, let's say it made a loss or something. And so again, you're not following the plan properly, which is not going to produce the results that it's supposed to do. And most people don't realize this because, well, one, they're not journaling their trades. They're not going to realize that the trading psychology is a part of it, and they actually weren't following the plan very well and that they were making mistakes. And so what they'll do is they'll say, okay, the strategy didn't work. I need to go back and find something else. I need to find some indicator, something that works better, or I need to add on something that helps me confirm that the trade is going to work out. That's another thing, is people like that confirmation or assuredness that every time you see these 3 steps show up and this pattern show up, that the trade's going to win every time. And that doesn't happen. You have to approach trading and be process focused and treat it like a business, that you're going in and over time, let's say 100 trades, you're going to lose, let's say 40 of them, and you're going to win 60 of them. But every time you win, you make $200, and every time you lose $100. And mathematically, over time, you will be up money doing that. But psychologically, you have to deal with losing 40 times and the unsureness of jumping into the market and not knowing what's going on and being nervous about, oh, what if this trade doesn't work out? And so that's where the psychology really comes into play. And so how to really break this cycle and get out of this and move on to the next phase is you have to, again, I think, find a simple strategy, because that's going to, again, make focusing on the psychological aspect of trading easier. If your strategy is a 3-step simple process, it's going to be a lot easier to know when you followed it and when you didn't. If you have 10 different reasons of when to jump in, it's going to be a lot more variables to already juggle. And thinking about the psychological side is just going to get pushed away to the side, and it's just going to get forgotten. And so if you can get to the 3rd phase where you're mastering your strategy and you're really just honing it and focusing on it, that is where you really have the chance to become successful at trading. Just getting here does not mean you're necessarily making a ton of money or consistently profitable, but it means you are fixated on a strategy and you know that the strategy isn't the problem. The biggest thing keeping people in this loop is they think it's the strategy is their problem. And the light bulb moment that kind of got me out of this was, realizing that I'm the problem, not the strategy. It's me trying to execute the strategy. And from this, you can start to journal and hone in on your trades, figuring out what's working and what isn't, and you can essentially then double down on what is, and you can start to then focus on your routine and figuring out what is going to consistently work every day and how you're going to consistently fit trading into your schedule and your life. Because when it comes to trading, it shouldn't rule your life. It shouldn't be something you're focused on every day. It should just be a part of what you do every day. And when it comes to it, trading should just be like a business. It's not an ego thing based on you. It's a business. It has ups and downs. When you're focused on a business, you're focused on, okay, what makes the business money? What do I need to do to make it consistently successful? And as well is a lot of the time with businesses, or every time with a business, is you have expenses. And so you have to spend money to make money. And in trading, this is trades that you lose. And so this is the way better way to think about losing trades is, let's say you are risking $100 a trade. And so every time you lose $100. And that sucks. And just losing trades in general, even for me still, it still always kind of hits you in the gut a little bit. It's always kind of upsetting. And when I first started out, it was really, really tough to deal with because, I just lost money. I don't know what I'm doing. There's another loss, especially when you're starting out, it's hard to trade and you're going to be making a ton of losses. And think of these like expenses. You essentially are spending money to find profitable trades. An idea is, let's say you have a good risk reward ratio where you risk $100 and every win you make $300. And so you have to spend $100 to find a trade that is going to give you a profit of $300. And so every trade you jump into, you don't know if it's going to be minus $100 or plus $300 to where you're making that money. And so essentially, you're having to make an expense and spend the money to find a profitable trade. And so I think that was a way better way for me to think about it instead of going into a trade and being, scared, oh, what if this trade loses? Maybe I'm not right. Instead, think about it as I don't know what the market's going to do. My plan says to get in here and, either I'm going to find out if this is just a business expense to either, rack up another business expense, or it's going to be a business expense that is turned into a profit. And that's the hardest thing about trading, is kind of dealing with that unknown and variable outcomes that are different every time, but treat it like a business expense. That's going to help you focus on the process of trading. This is the biggest thing when it comes to trading, is you have to be process focused. Is everything when it comes to trading is always about the process and not the results. If you focus on the money and the results, you're just never going to be profitable. I can guarantee you that. And so you have to start to, realize why you're focusing on the money and start to shift your mindset to thinking about something else. And so when you think about it and you're approaching trading, is make sure you focus on where you are in the stage and understand that you could be stuck in this learning loop and you need to settle on a strategy. It doesn't matter what that strategy is. And you have to start to focus on your trading psychology, because that's really what is going to make you successful at trading. Of course, both of these are important, but without either of them, you will not be profitable at trading. And so if you do want a really simple strategy that I've spent kind of years honing in, and I kind of wish I knew when I started trading, I tried to, do all these different strategies. And what broke me out of this learning loop is finding this simple strategy that I now use. And I've been on this master the strategy phase for a long time. And so I've honed it in. And so if you kind of want to skip ahead in that learning process line, check out this video right here. It's going to go into a ton of details and trade walkthroughs of how you can consistently execute a simple strategy. And I hope it potentially works for you.